Ben, you and the team are clearly very excited about artificial intelligence and the opportunities there, but what if you're wrong? What if there's a lot of skepticism, there's cynicism, there is potentially government intervention around a theme that might slow it down? What was your reaction to that?
Look, I think you have to be alive to all the risks associated with investment. When we consider any investment in the portfolio, we obviously look at the return profile under various scenarios, and we also think about the risk. And the same is true for the themes that we're excited about. So for us, the largest part of the risk associated with the theme and investing in a theme is that you're too early. And that is endemic to tech, right? That's over-promising, under-delivering, and then in the end, of course, the technology comes along and changes everything. And so, are we too early? Would be a principal risk. And there, I think, I'm hopeful that we're not. We just saw 100 million people use ChatGPT in 2 months. It's like the fastest adoption of a new technology that we've ever seen. And that's a function of having 6-7 billion smartphones in the world. So the diffusion rate of this technology should be rapid, much faster than we saw, say, with the internet, which was a PC-based story, or even the cloud, where you had lots of infrastructure already in place that was on-premise, not cloud.
Yeah.
This is a clean slate, billions of people, and so far the numbers say that we're already in that inflection point. So that's one risk. Regulatory risk, you can't, again, dispute that risk. The industry is calling for regulations, so it's already alive to this. It wants guidance, stewardship, because AI is very disruptive, and disruptive technologies will create winners and losers, and the pace of that needs to be managed. The society needs to manage the pace of change when it relates to a technology, a general purpose technology like this. And we know from technology and what I've just said, that this could be very rapid. So yes, regulatory risk is something we can't, it's real and it will happen, but I think it won't happen in the way that people fear, that no one is going to turn around one day and say, that's the end of that. In the same way that regulation is required on the internet or social media, or in the real world, something like aviation. The jet engine happens and this new technology transforms everything. Global travel is a thing. It's one of the biggest industries in the world, thanks to the jet engine. But the regulatory framework for that evolved. It evolved actually on an incident basis. So when there was a problem, a new bit of regulation was introduced. I think that's the model that we're going to see as it relates to AI. So there are risks. The other, of course, the elephant in the room risk is that stocks are ahead of themselves. And again, we can't know that because in the end, it's still very early. Our hope is what we see from the technology and the excitement around it. Key people at Microsoft and at Google, and of course the sort of the negative take on AI from someone like Elon Musk says that this theme is very real, very powerful, happening now. And so I think what that says is expect volatility in the stock prices. There will be times where the narrative and the monetization timeline are not in sync, but we are hopeful that we will stay fully invested in this theme because this feels as meaningful to our sector as smartphones, cloud, and the early internet.
From an investment point of view, in terms of how this theme evolves, I'm guessing there could be multiple winners, multiple losers, and this could be a multi-year theme. Is that fair?
Very much so, because when something is as meaningful and disruptive as AI threatens to be, that it will take time for it to ultimately play out. We saw that, of course, with the internet, where very early iterations of the commercialization of the internet gave way to something much bigger, much more disruptive once we had the smartphone and broadband internet connections. So this is very likely to play out over an extended period of time. That being said, the barriers to adoption often with new technology is the upfront cost. A washing machine or whatever it might be requires an upfront investment. The smartphone. We don't have that today. The investment's being taken by other companies behind the scenes to train large language models, to be able to do the infrastructure stuff that we don't see as consumers. We pick up our smartphones and our PCs that we already have, and we can instantly access AI. And that suggests to me at least that the diffusion timeline may be much faster than we've seen with previous technologies. We can also see already a very broad applicability of this technology. This is not narrow superhuman AI. This is the ability to use natural language, a new interface essentially, much like a web browser was with the internet if we went back to that earlier period, which democratizes hugely the technology. So we can all access something that scientists and lab people and mathematicians, that was their domain. Now it's been democratized. And so the investment story will take time to play out. We will have early excitement and then we'll have some retrenchment. We'll have early winners that maybe don't ultimately make it, like we saw again with the early first generation internet companies. So this story will take time to play out. The technology sector is front row seats. We're where the action is because we're the enablers. We're building the semiconductor chips and the compute infrastructure to make this possible. But again, going back to those earlier technologies, those earlier general purpose technologies, what starts with tech very quickly, or I should say, becomes much more disruptive beyond tech.